The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Friday, the 17th of July. My pleasure to be here and my pleasure to have you as listeners. Just a quick note I was reading there. Thank you to our hosts, and let's just get right into the Dow's down 69. Excuse me, the Dow is down. It's actually red. At minus 68 at 18,051. S&P's down only $1.70 at 2122. The comp index is up 29 at 5192. I wonder why that is. That's very good, because we've got the attempt to get to the all-time highs in the QQQs at the 120 level. We'll see if that happens over the coming period of 2015. Looking at gold, gold is down 12 at 1131. Silver's down 11 cents at 1486. As long as this dollar is screaming, it's up 11 cents at 97.92. Dollar's going to really take the lead here. It's going to clobber the euro. It's going to clobber gold. Just puts a cap on these mirror image stocks. As gold goes up, they tend to go down. What is interesting is that the TLT is up 53 cents at 118.64. So this is saying to me, the overall aspect that I've harped on for 10, 12 years about the Japanization of our bond yields is going to be challenged. Maybe later this year, because the Fed has said that they are going to raise rates. There's a really good chance, let's put it that way, that they'll raise rates. All right. What we've got then is crude oil is down 55 cents at 50.37. You know, the commoditization of commodities, that has been going on for some time. And it's a big issue because it's creating a deflationary aspect in certain areas. So let's get to the nitty-gritties, because this is Technical Friday. I want to do a whole bunch of things here. First of all, if you're looking at these charts that you can see in Tiger TV, wow, what a great medium this is. You've got a low bar in the E-minis that was created right here at 21.15, round number low, at 4:40 this morning. And look what happened. The MACD still had this big, this is like a Le Mans racetrack. It had to turn this corner, and it took a long time to do it. But as it broke, that beta, that theta, whatever you'd look at in terms of the fast-moving average, the green line, the 9-period differential of the MACD, and the slow period, this is the 10-minute chart. And the way the stochastic started, it's look at this, here's the low of the stochastic, 1 bar before the actual green candle. So at 4:30, you get the stochastic low, and the unbalanced volume is giving a very positive divergence. And then what do? You go peak. What's the Chapman wave methodology? What's the intrigue? What is the whole concept? What is behind the scenes? You want to identify the lowest, most obvious low bar and merely count each successively higher peak. And at each leg, you expect to go leg A, then leg B, and if the technicals are confirming or the price movement is such that you've got a cup formation about to take out the left side high, whatever it is that is technically looking very good, chart pattern, holding the 9-period moving average, you want to look at that and say, hey, there's a good chance it could go to leg D, because the objective in the Chapman wave is to go from the lowest obvious left side low bar to 4 higher peaks, peak D. That's where other things can happen. So here we are with the chart with all the technicals and everything. Do you need that? Look, went to a D. That's what your objective is. Little double top there, right there. That's the high at 8:40 this morning, 2119.25. You get the stochastic, look at this failure pattern. Right shoulder failure in the stochastic. MACD does this M formation, turns around. Relative strength gives you a failure pattern. On balance, volume holds nicely right until that turn down on that fifth candle, and bam, it starts on its way down. And what does it do? It goes to a low of 21.1275 at 10:20. Now it's starting to make this pattern of a rally. Well, you remember I spoke about that MACD? MACD is the same pattern, the Le Mans MACD. It's got this big turn and a very fast loop, and it has to cross the red, the slow-moving average. This green line must cross it. And as it crosses, you're going to see that price go above 2116.25. But if it deflects lower, because the stochastic's sort of flattening out at 37%, you'll get the pattern. Now let's go to the naked chart, 10-minute E-mini chart. What is happening? You get that low bar right there at 30 minutes past midnight last night. Goes peak A to B, comes back, retests right there. It retests exactly 3 times. The bars come down, don't break, starts a brand new peak A, B, C, and this gets preference. These peaks right here get preference to that very big A to B, because I want to not miss a single peak. Why? Because if I got to that peak C there, I would have said, hey, wait a minute, there should be a D, and there wasn't a D. Well, of course, I could have used the Chapman wave parallel highs, peak C1, C2, but by the time I recognize this, it's too late. I'm at D, pull back. I already either would want to take profits or tighten the stop, or say, hey, maybe I'm going to get out and I'm going to reverse to the downside, the position. Okay, so we've come down. One of the things about the downside action is that the letters on the upside, D is most important. The letters on the upside in a bull phase are way more important than the letters to the downside in a bear phase. I just want to clarify what I mean by that. What I mean by that is that you don't have to go to a D to start getting a brand new buy signal. You can get it at A, you can get it at trough B, you can get it at trough C, you can get it at trough D, even to a trough G. So other things need to come into, are factored in. And in this particular instance, it's patterns that we look at. It is a relationship of each down move. Look, in Elliott wave, this is leg 1, 2, 3, 4, 5. If you want to, it's not a perfect, but it's close. And it says this is where you could see a rally to the upside. But I've drawn 2 patterns. One is the cup formation, could be a V-shaped formation. I've drawn a cup because my suspicion was the steepness of the decline. And then I glanced over at the MACD and stochastic of the 10-minute chart with the technicals on, just for a confirmation of what I was thinking. And that said, yeah, the stochastic is still flattening out. It's going to take a while for it to actually turn up. So I drew in the arch formation that says you could get an arch formation with a little bit of a bounce, make it even an M formation, that we should stay within the trading range of 21.14 to about 21.1650-ish, this high right here. 21.1675-ish, just for the moment, until there's a little bit more stabilization. This is the naked chart. All I use, and I don't even need candles. I'm only using candles because I can open it up and you can see the peaks and troughs a little bit clearer. So that's it. Let's do this. Get out of that. Let's move it away. We'll come back to it in a while. I'm expecting the arch formation. So we'll just wait and see what happens to test the lows. Now, look at the dollar, how it's broken out. This is either brand new leg A or leg F. But the MACD is terribly strong. No, wrong word. Very strong. And the stochastic's making an M-shaped pattern, but up in the 90% range. And that says that at least for now, the little inside track Chapman wave repellent zone that was pierced is going to be support right on the 9-period moving average of 96.96 to maybe 96.60, could even dip to 96.35. But then a close below 96.30 after this move says be careful, because the dollar could take a little bit of a breather here. It's had a spectacular move being Friday. I want to see how we close in this candle. So far, this is leg B, a brand new leg B. I'm calling it, it's a gray B. Why? because it's under the previous high of peak E. And if we make a new high in this leg, I have to go F / whatever it is. So I just want to be clarified. I use my technical tools to be very articulate, as articulate as I can be in this technical trading. And this is what I'm looking at. Gray A, gray B, cup formation is forming. We've broken the chance of the arch formation, at least for now, especially if we close above 97.78, the high of the week of the 29th of May. All right, another little technical aspect that I wanted to go through. I was asked if I would look at a number of things. So let me run what we haven't spoken about. Look at Google. Google is, look at that candle. Hey, what happened to all that notation? Look at this candle. Goog is up 82 at 662. This is, in fact, one of those situations where I can call it, I have no choice. Yep, I have no choice. I have to call it leg A. Now, can it fail? Yeah, it can fail. I suspect, because I think that we have further to go to the upside. You remember we've been in this trading band for quite a while. And what I'm going to be discussing on Monday night, for those of you who are not subscribers, this is a subscriber-only webinar. I'm going to be continuing my look at the match between the late 1920s and the period we're in. Wow, I'm even going to talk about Hollywood, the actual putting up of the sign Hollywood. It was actually called Hollywood Land because it was going to be real estate development. Never did become real estate development. A whole bunch of things happened. So Google, Googl is a different count, I'm told, in the debt. But I'm going to talk about how the movies in the late 1930s saw all those gains in the theaters start to be ameliorated somewhat by what? By television. Oh, wait a minute. Haven't we gone from cinema to video streaming? Aren't we looking at something a little differently here? Aren't we looking at a situation that says, hey, a period of 1920s matching the period of the teens that we're in? Is that not interesting? Yeah, I think it's very interesting. When mediums change, they change usually across a centennial level, like in 2000. And what happens is that as that unfolds, yes, I'm going to do that. Thank you, Peak D in the Den. I will do Google L. In fact, I'll start tracking it a lot better because it did not make a lower low. And this gives me a much better reading of what I think is happening. I'll try to do that during the break. I never make a note because, by the break, anything could happen. My mind already would have moved 30 paces. So there's the break. So, folks, the Dow's down 75. The S&P's down 2. I've got a webinar coming up. I'll do this as we're about to go to the break. Engineer doesn't mind. Oops, that's the wrong one. Right there. Look, right there, front page of TFNN. Check it out. This is Basil's new webinar. Basil Chapman follows up on his popular 1920s webinar. I'll talk about it when we get back. I think this is going to be fun.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Yes, I did do Google L, and that Google L is in that is an F/B in the daily, D in the weekly, and that's really good. To know, and that makes a change, and that tells me I think Google goes a little higher right now in this time frame. I think there's still, remember what we were talking about, what I said was that 17,500 level, two out of three closes below starts to set that weekly chart into sell mode. Most importantly, I'd also said that you could continue bouncing within the range. And rectangle formations can last a lot longer than your patience and a lot longer than your money. If as you get to the bottom of that, you start shorting, or as you get to the top, you start buying. So this has got a little way to go from the 18,042 level down. It's very negative today. It's down 40.43%, and the S&P is only down 0.11. So there's a big difference here. Why? You've got Exxon, you've got a bunch of oils in the Dow. But GE, which is acting very well at 27.19, up 14 cents after a good earnings report. I like its action. It was telling me for a few days that things have been should be good to the upside, and then the surprise today of much better earnings. I like that. Well, in the future, in the early pre-market, GE was up much more. Let me just go back to this. So what we're looking at here is this declining dashed red line in the Dow. This is what I show my subscribers. Oh, let me just go back to that. So on the front page of TFNN, what we've got is right there, We've got the upcoming webinar Monday night. It's for subscribers, but you can subscribe for a month free if you want to come and listen to it. You don't even have to, that's all you have to do. You don't even have to read my very intensive everyday reports. A lot of stuff going on. But every day my Traders Corner has a little summation of what I'm looking at, so that if you don't have time to read everything, or you can come back to it, that's fine. But then I go through my 15 bullet points, some stocks or indexes that we follow every day, and all the positions. We have the most positions I've had on for a while. That's never a good sign, both long and short. And so what I want you to say is, this webinar is a follow-up to the other webinars. And in the very beginning one that I did in February, I said, there is a chance. I didn't think there would be that possibility, but I wanted to mention that we could go into a trading band, and that trading band could last quite a while. So let me go back to the chart here. Look. So what we're looking at is this. This was back here. This is when we were talking about it when I did my webinar. So the Dow goes on to 18,288 in March the 2nd, comes back down to 17,579. I showed my subscribers the Chapman wave single leg A phenomenon that I think we're under right now, that can take us just towards, just under, right on or just above the previous high of 18,351. And I had drawn in the yellow line. You see that yellow band right there? That's basically that's the resistance range, except for the little aberrations that went above it. But that's basically it. So when we stopped right in there, so I said we could pull back under the little red dashed line today, and then we'll see what happens. Now, this is going to be interesting, because if there is peak A, you could get a B, but B, if B is strong, then we've got to be real careful that it doesn't become a single leg A, even though it's got to the B. If that new recovery high above 18,131.61, even 1 penny above it, starts leg B. And if that happens Monday, then that says we've got a potential Chapman wave squash here, right there, which should take you to D. But if it's a single leg move to the upside, and then at any point suddenly there's this bad news, and the bad news takes away all the gains within a few days, and takes us underneath 17,943, this 9-period moving average support, then we've got to think that that's a failure of significance. My thinking here is that there was so much negativity that the VIX index went into the 20s. Whenever it goes into the 20s, it just gets exhausted and it comes all the way back, and now it's all the way back. And now we've got the trading band that just says you're going from the bottom back towards the top. I'm saying towards, I'm not saying to a new high just yet, but I am saying that there's enough force to the upside in many of the other indexes, and you could get this rotational top that says the Qs have gone to an all-time high, the New York Stock Exchange hasn't, the IWM hasn't, the Dow hasn't, the S&P is real close to doing it, and sometimes you don't get them all going to highs together, but you do get them going to lows together like you did in March of 2009. So now let's get back to our story. You see, I diverted just for a moment, but now I'm going back to the story to say, so this is what we're watching for, and this is what I'm going to be discussing on Monday night. What's the relationship to the period we are in to the period that I'm looking at, which is the daily chart of 1929 in 1 day equals 1 week? What's the relationship? And look at the VIX, a little rally. It's only down 0.8.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So we're looking at a question today about GoPro. Someone has a position waiting for their Chapman Wave leg D in the weekly. I said you got to look at the daily first. The daily is in leg C, a peak C, and you need to go about 56.19 to start leg D. I suspect that early next week we should get that, but it's really the 57.33s. It's a 55.77. 57.33s, that's the 200 period simple moving average that most, no, wait a minute, whoa. Yep, it is. Simple moving average. How can they be so different? And this is a 200 period exponential. Sometimes they really break away from one another. This is very unusual. So the simple moving average of 57.33 is what many fund managers would be looking at, and that's most important. So the weekly chart is making that pattern that I talk about, the falling axe formation, look at lower highs and much lower lows, and then it stops and turns around and starts to make either a V or a cup-shaped pattern, and that 57 is really what's needed so that it can break above 61.19. That starts leg D. But we go one step at a time. If I can find my 120-minute chart, a 120-minute chart. Let me see if I can find it here. Pop 120, 120, 120, 120, 120. 510. Okay, there we are. 120. Yeah, and there it is. And look at the way these moving averages are so important. Look at the 120-minute chart. Look at that coral-colored thick line. That's the 200-period exponential moving average. Resistance, support, resistance, resistance, resistance. didn't even come into the picture. Now, resistance at peak D, when the GoPro, GPRO, trading at 55.80, went to at 11:30 on the 15th, whenever that was 2 days ago. It stopped dead at 15.16.19. Why? That just happened to have been the 9-period moving average, see 56.16, right? And now you've come back again, and it's trying again, and this is peak ABC, a little ABC. Maybe it takes a little bit of a breather, but I think that early next week it should start to move, and then it's going to take a little time to make this a support level of 56.16, call it 56, rather than a resistance. As soon as it breaks above, it can't just sneak above, it's got to hold above a couple of bars of this 120-minute chart. All of a sudden, that becomes an improvement. It fails completely if it closes under 54 in the next 2 days. All it's doing then is making that arch formation that I always talk about. Arch formation, what about it? Look what happened. There's the arch formation in the 10-minute naked chart. I think we should pull back and then have another attempt, and that's going to tell me more about my, where's it gone? Where did it go? Right there. More about, you see the breakout to leg B? NACD turned sharply, but it couldn't cross positive. Until it crosses positive, it's going to be a barrier right there. And we're looking at the stochastic improving tremendously from the low that was made earlier, just above 20%, at 38 right now. But that's not good enough. You've got to get the crossover. You've got to get the price moving higher. And then all of a sudden, you see this cup formation. If you can break above into that 2116 level in the E-mini, sorry, 2116.50 to 75 level, that says the cup formation is predominating rather than the arch formation. So there's, and the technical tools are just confirming. Here's your 200-period moving average. What a beautiful moving average support level. Look at that. Okay, so that's it. I'm going to try to mix things up here a little bit with current and what we're looking at more as knowledge-based. The question in the den I saw, Caterpillar. Yep, let's just look at Caterpillar. Just, it was mentioned there. Caterpillar, look at that. Caterpillar is in a decline, a huge decline. Yeah, it's held very well considering the technicals. It's just in that rectangle formation. See the left side, right side, price, time match, testing it. My thinking here is that Caterpillar, because of the weak stochastic and the monthly MACD, if it breaks its low of, let's call it 78, if it closes under 77, you've got to give it a point or two. The next major level of support will be down to the 63s. It's just not in the area. Yeah, and this is to do with commodities and things like that. That's why it's not doing well. Another question was I saw there. Yeah, XLV, a statement, XLV bubble. I don't know about, where did that go? Oh, I typed it into the den. No, XLV on my chart, right there. So the XLV is the S&P Healthcare Spider Fund. Now, what's really interesting is it's at 76.76. It had this big spiral to the upside. Is this a G or is it an A? Well, look at the monthly. The monthly technicals were deteriorating. The price was just nominally moving higher, having held the black line, that 9-period moving average. S&P Select Healthcare Spider Fund. Look at this monthly chart. And even now, at this particular point, so extended in some of the other charts, the monthly is just saying, ho hum, I'm just moving on merrily. Money keeps coming in. Not a great deal of money, way less than the breakout back on the October of 2014, where I had 317 million on the month. Now I'm only at, last month, why? I only did 164, less than half. So this is a very interesting situation, but price is the arbiter of a trend. And this trend so far, look at the way it's held above the 9-period exponential moving average. It hasn't even touched it since this last October pullback under the 9 EMA, and then whoosh, closes way above that. So this will be a slow grind to the downside in the monthly. But what will happen is there's a chance that there's a peak D forming in the weekly. We won't know unless two things happen. If the high of 77.26 made the other day with the Chapman wave 2-bar reversal says if there is a break to the downside at 76.75, below 75.60 in the next 3 sessions, I don't know what will do that, but let's just say there is. This will become an Eiffel Tower, straight up, straight down. Looks like an uppercase letter A, and watch out on the downside. But the weekly chart has to close below the 75.23 by quite a bit. It has to really close below last week's candle of 73.86 to suggest that you're getting the arch formation finally, with lower lows and lower highs to come. If anyone was to short, right now is the only time. I mean, this is a perfect time. Why? Because the risk is you're at 76.74, and all you need to do is to get to 77.27. So there's like a less than a point for risk, and that's the way you do it. Would I do that on the XLV? Well, the XLV looks a little stronger than something like the IBB, which I think that big spiral to the upside. Oh, actually, IBB is holding quite nicely. Now, what's really important about the IBB, this is interesting. It's down $1.57 at 394.10. The daily chart has got 89%, and the stochastic and the MACD has expanded. This is the pattern that you've got to be careful of, that basically looks like a single leg A up. Why? Because if the IBB, the iShares of the NASDAQ Biotechnology ETF, takes out 388 and they rally more than to 390 before taking out 384, the 9-period exponential moving average over the next 2 weeks without making a new high, which it can do in the blink of an eye, 396.94. Even the futures earlier on, there were trades last night that I think were higher than 396.94. Doesn't matter. It's the print that counts. And then we're going to be watching it. My bias right here on the IBB is that there's a potential for a decline. And if you look at the 120-minute chart, there's that pattern that I always look at with that H lowercase arch formation, the H formation that says, okay, this is the opportunity. If you want to short, 396.95 could be your stop, 1 penny above. Why? Because if it goes above that, it could even go much higher. And 1% risk, that's all. But it would mean that money is coming out of the biotechs and going into the Googles, the high techs that have been really on fire. Then there's another sector that I told my subscribers this morning, and we got a position, so it's up 5% or 6% or something right now from our entry point. But it's in an area that's just been completely dismissed, hasn't even been spoken about. But there is one stock in that sector that has been the leader. We did own it for a little while and then got out, and then it screamed to the upside. I was very upset about that. And others are now following. And that's saying that sector should start to move higher. So there are sectors that have the potential here to take over if there's any weakness at all in the sectors that have been really stellar performers. All right. So the question, wasn't the question, was a statement. The XLV, where were we? Right there. XLV bubble, IBB bubble, Disney bubble. Well, in a sense, yes, but real bubbles would have the lay people talking about how much money they just made. So I don't see this as a bubble. I think maybe the bubble is going to come with the next big move in the biotechs, if there is one, unless this one starts to re-accelerate with a breakout, and then we will get that bubble. And then you will hear people just everywhere at the tennis courts talking about how much money they made in the biotechs. Now, Disney is very interesting. Disney also, like the XLV, has just been a stellar performer in terms of holding the 9-period exponential moving average. Now, I'm going to be talking about Disney in my webinar. I'm going to be talking about certain stocks very specifically and giving them as kind of clues as to what we'll be looking at, how we might see rotation through one sector into another sector that takes over the technology of one of the older sectors, that type of thing, number one. Number two is the relationship of the stock market right here with the volatility index. Now, I mentioned Disney. I'll get back to Disney right now by saying made a peak E today if there's no new high. It's getting rather overbought. I don't actually see this as parabolic yet, but I see this as quite extended. So I'll be talking about some of these extended stocks and what do you do? Well, maybe you put them on your buy list and just have patience and say, hey, you pull back 15 to 18%, I'll be interested, because you always come back. Okay, so now I wanted to show you the VIX index. Look at the volatility index. It has plummeted. This candle that I said, the 20.05 peak F, it was an alternative way that it became peak F, on the 9th of July, plummeting like this to a lower low than the 1193 inverted rogue wave pattern right down there on the 23rd of June. Now we've gone down to today's low of 11.77. That puts you into the category of a lower low. You can't even make I can't make the case at this particular point for that cup formation because, well, the day's not finished. But so far, going to a lower low than the low of the 22nd week of May the 22nd, at 11.82, no, I can't do that. And now I have to even lower this further for the monthly chart, and we're going to have to restart the cup, the bowl formation in the monthly. And that's saying that the volatility index is still showing that there's buying intensity rather than selling. Let's go to Brent Martinez. Hi, Brent. How are you?
I'm doing great, Basil. How are you today?
You know, you have the most sensitive ears of anyone I know. Did you pick that up as I was talking or did this morning you go into this particular issue?
Yes. So you were kind of hinting around the edges.
Okay. So you want to look at.
I bought this way back. I had actually called Steve Rhodes about it. It made a big head and shoulders pattern down at around $6. I bought it at $6.10. It's Diana Shipping, DSX.
DSX, folks. Diana Shipping at 822, up 57, up 7.45, much like many of the shippers today. And so let me just do this. I used to have this very well notated. I'll do it. Takes me a second. A, B, C, D. Is that an A? Yep. A, B, C, D, A. And this is an alternate count E/B, making this an A. I can't see. I'm going to take 1 second to do this. 735, 735, 35. Yep, I think they're all 35s. And this is a B. And then this is going to be an overlapping wave C. Got it. All right. So we've got leg C in Diana Shipping. Beautiful move today, up 7.45%. And way above the 9-period moving average. The MACD is improving. And the stochastic is getting close to 80% at 78.40. And the weekly chart's got this beautiful cup formation. Left side, right side, price time match could be right here. I'm going to go to that one. All right, give me 1 second. I'm going to go to the weekly chart, go to the low bar right there. I'll call that the plumb line. I see no reason why not. New parallel, make that green. There we are. Beautiful. I love this technique. Look at this. And now I'm going to do the left side, right side price time match. I didn't get that exact. It should go a little bit further. So give me a second here. And I'm going to, oh, look at that. So, Brent, you'd like to know, is this the move that's going to take it into the 8.60s to start a really powerful move that takes it over all the left side resistance back from 2014? Is that your question?
Yes, it is, Basil.
Okay. Let's do this. I'm going to give me 1 second. I want this chart to be as accurate as possible. Format space to the right. It's at 6. I'll make it 9. And here we go. This is exactly what I would expect. There's a pattern that's forming here with the Chapman wave inside wedge target line. It's broken above that today. That's very important. And it says that 863, the high of the 28th of November, the week of the 28th, could be hit by late August, early September. I think it'll be sooner. I'll do a little more work. Hold on. Can you hold on?
I will. Thanks, Basil.
We'll be back with DSX, Diana Shipping, right after this. Diana Shipping.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks, we're back. So we're looking at DSX, which is Diana Shipping, and NAT, which is American Tanker Shipping, has had the best move of all. It's gone from the 7s to the 16s. And sometimes it leads. And right now it looks a little toppy, and the others are starting to catch up. So I think that this looks very good. And the way I've got Diana Shipping is that on the weekly chart, this is a big move. If it accelerates like this, it should get to the 863 area way quicker than the way I've got it. But this is the line that it has to break, this dash pink inside wedge target line. It needs to go into the 860s by early next week. If it's able to do that, you've accelerated the move to 918. My target here is between 863 and 918 over the coming 2 to 3 weeks. That's a lot quicker than the September target that the price has. But the way it's moving now, I think it's got a quicker acceleration unfolding. So the support level is 761. I think that something lousy will have to happen there for it to break the 761, 747 support at this point. I like it. I think you got a great trade. Congratulations.
Thank you very much, Basil. You have a great weekend, and it was nice talking with you. And I'll just plan on talking to you soon.
Thank you very much for calling. I always appreciate it. Let's go to Shivan in Boston. Hi, how are you?
Hi, Basil, TGIF. How are you?
Yeah. So we're looking at Vail. I think this is what we spoke about the other day, right?
Yes, last week you spoke about it and you said like follow up next week, and I was just wondering. Like,
Yeah. So Vail is just
8:45 and then bounce back.
So you've got the old stuff. You're looking to see if to add to it. Is that correct?
Yes.
Okay. So all I can say to you is, if you want to add to it, I would just, I'd still wait another 2 to 3 sessions. And as I said before, if it starts to rally, you'll have plenty of time to get into it. I don't want it in case it takes out the low of 520 at this Valet SA. I think at this particular point, it's just starting to try to form a base. It's very important. I want to see where it closes today because it's the left side low of 545 that I need to monitor. So how about calling, if we can, call me Tuesday or Wednesday of next week, okay?
Excellent. Thank you.
Great. Thank you so much for calling. So, folks, let me go back to this because I think that this particular webinar is one that's going to be, I think, fascinating. I believe I should be introducing you to some concepts that you maybe haven't put the things to put them, all the pieces of the puzzle together. I'm trying my best to put it together to say we are headed for some kind of a culmination of this particular era and phase. There's going to be a change coming up. I don't know when, but it's going to be a change that goes from capitalism to some form of socialism. I hope I am dead wrong. And I'm going to talk about the politics of what's going on here. I'm going to talk about other things on my webinar Monday night. It is going to be thought-provoking, I hope thought-provoking, but I will also give you the facts behind it. So please go to the front page, see if you would be interested in signing up. You'll get my newsletter for free, but you can't get it unless you are a subscriber or you have my newsletter. So this is the webinar coming up Monday night. I'm going to talk about parameters to look at, time frames, and why I still think that the stock market is the place to be in until we start to make some kind of top of significance, and we will know what icons to be looking for at that particular time. At least I hope we can check them out and check them off. Just tick them off. Say, okay, we've reached that. We've done that. We've done that. What are we waiting for? You know what I'm waiting for. We'll talk about it more on Monday night. So Monday night, 5:30 to 6:30 Eastern Time is my free webinar for subscribers, and I'll be going over some of the previous charts. I'll be looking at the where we are in what I believe is the Elliott wave notation, why there's just a chance we might make leg D in the monthly chart before we start the big pullback. That's a possibility. I'm going to talk about it. So stay tuned to TFNN, folks, but I will be back on Monday, but I hope to see you Monday evening. And this weekend, I will hope to get out a whole bunch of charts as I did before. And we will be talking about a lot of things, thought-provoking things on Monday night in my webinar. Thanks for being here. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.